Hey guys, in this video, I'm gonna talk to you about why all the yelling and chanting at the end of 2020 about tech being too concentrated, the money in FANG stocks being too concentrated because all the money was in 5 stocks, how if those 5 stocks fell, the whole market was gonna fall and the market was so unstable. I'm gonna dig into why that didn't happen and what actually happened. And even if you're not a trader, even if you have an income portfolio, this matters to you because if you got hit with that noise and that information, then it's absolutely negatively affecting your life. Okay, so let's jump into this. Hey guys, my name is RC Peck, and one of the things that is so important is to know how to filter information. And no one is taught how to filter information. What they do is they go to other information, look over here to this information, and they don't really understand what is real, what to trust, what to like, what not to like. And so they go through these shortcuts, and these shortcuts in the human brain are, I'm just gonna listen to who I like or what makes sense. And that is a huge mistake. So what I wanna cover in this video is 3 things. 1, how you can look at a price chart and immediately filter out information. Number 2, why that concentration in 2020 in 5 or 6 stocks actually didn't matter and never mattered. And 3, how you can make sure that you know how to filter out all the BS, all the hype, all the fear, so you can make sure your money stays in the market. Okay, let's jump over to the price charts. Okay. This almost looks like a Jackson Pollock line. So let's just first start super simple. So in September of last year, the big 5 or the big 6 stopped going up. Some people refer to these as FANG stocks. So Microsoft stopped going up, Amazon, Facebook, Google, Netflix. And now on the screen here, I also have this black line here, and that is just the S&P 500. So I'll just keep my cursor right on that so that kind of has it stand out. So the big pounding for all of 2020 and even before that was the markets are too concentrated. Too much of the gains in the market are only in 5 stocks or 6 stocks. 90% of all the performance is in 5 symbols. If anything happens to those 5 symbols, the market crashes. And so then all this hype happens, and there was an election going on in the US. And so here you have a screen shot from September 2nd to the end of 2020. So September, October, November, December. So we have 4 months. And other than that, I don't even know what to call this, hot pink. That's Google right there, which they don't call themselves Google anymore. They call themselves Alphabet. That was up 1%. But the rest of these highly concentrated names, trillion-dollar companies, -4%, -5%, -7%, -10% for Facebook. So this is what actually happened. And again, the black line is the S&P 500. And just notice that other than Google, which was up 1% during this time period, the stock market was up almost 5%. So the question is, one question I'm going to answer is why, but the other question is just when you understand how to filter news and noise and hype and fear and BS and promises, you're able to really take back control of your money. And so first, I just want to show you, we had a period where these most concentrated or the gains of the market in these 5 or 6 stocks actually fell or went nowhere. Okay, now since that December 30th, I'll just jump over. We can see what happened to those names since December 30th of 2020. And it's not that long, right? It's about 5 weeks of gains, and all of a sudden, boom, things turned around. Now, for reference, I'll just highlight the S&P. In this case, it's like that dark teal, which is actually pretty hard to see. It's the 3rd line from the bottom. But you got Alphabet up high over 10%. You've got Microsoft up 8%. What's the teal, the light teal? Netflix up 4.5%. So things fluctuate, guys. Things move. Now, you might say, RC, I'm not in those names. It doesn't matter. You don't have to be in the names. First of all, if you own the overall market, you are in these names. RC, I don't day trade or I don't trade, so I don't need to. It has nothing to do with trading or the type of investor. What I'm showing you is how when the news and the media and the newsletter world and the big box world get all together and they start, following this narrative, and it scares you. So if you were scared, or if you were put on your heels, or if you sold some of your positions because you heard of this overly concentrated stock market, and if those names fall, the whole market falls. Here's a perfect example of that actually not happening. Those names went nowhere for 4 months, and the stock market went up 5%. Okay. I want to quickly just visually show you what happened to those big names. So Amazon's on the top. And if you just kind of look here, it's just going sideways. Amazon price is just going sideways. Down here to Apple. Apple price is just going sideways, not crashing, just going sideways. Microsoft, same thing. Going sideways, broken out a little bit. Next one down, this is Facebook. In some ways, probably the worst looking of all of them. Really stuck in that sideways trend since July. And then the very bottom of Google, which out of all of them, Google looks the best. It broke above its sideways channel, is now breaking above. But sideways is not crashing. And when any size symbol moves higher, certainly just let's take Amazon, for example. Amazon moved up 106%. You're going to expect some digesting. So the question is, what happened, right? Because the market did not crash from September, even until today. So what the heck happened? So the answer is, it's called rotation. In any healthy bull market, and this is an important thing to notice, when there is rotation going on within the stock market, that is a sign of strength. So yeah, there was some concentration. That concentration may come back. But what happened from September forward to today? I'm recording this close of market on February 2nd. What happened was other types of shares went higher. So on the screen, you see emerging market, which is actually the worst performing one here, emerging market. And at the very, very, very top is biotech. So all that happened was something called rotation. People rotated out, or they didn't buy more of Amazon or Apple or Facebook or Google, and they bought more of micro caps and small caps. Mid caps aren't on here. Mid caps. They bought more semiconductors. They bought more biotech. They bought emerging markets. It's the rotation. And so if you have watched some of my videos lately and you think I sound bullish, it's because I am, but not because of a newsletter I read. I almost said wrote. It's because I'm looking at the price charts, and the price charts are saying we're going higher. You've heard me talk about and point out how emerging markets have gone sideways for 13 years, and they are breaking out to new highs. Emerging markets represents about 2/3 of the world population. So when you get that rotation, that is a very healthy sign of a bull market, right? Because rotation is a solid foundation of a bull market. So I hope you like that, guys. If you have questions or concerns about this, please leave them in the comments. I respond to all the comments. And please like the button because it makes a difference. Thanks so much, guys, for being in my world. And if you liked this video, you're going to love some of the other videos we have for you at the end. Okay, thanks, and I will see you on the next one. All right, bye.